I'm Donna, your Finimize community host. Welcome to the Modern Investor Summit. I'm here with three very special guests today. Atul Tiwari, CEO of Cult Wine Americas, Ezra Levine, CEO of Collectible, and Mario van Bergen, co-founder and head of investment at Splint Invest, to speak on Behind the Rise of Alternative Investments. Now, if you haven't already, please introduce yourselves in the chat box with your name and where you're tuning in from, and answer the poll you should see on your screen now. This will be a 30-minute discussion followed by a 15 minutes of audience Q&A. Don't forget to ask your questions in the Q&A box below and upvote your favorites. We'll also be giving away a free Finimize yearly subscription for anyone who asks the best question in the Q&A box during the session. Okay, let's dive straight in. Thank you so much for joining me today, gentlemen. How are you all doing?
Doing great. Thank you. Thanks for having me.
Amazing. So let me just dive into the first question of the day. So what has been driving the rising demand for alternative investments?
I'll just lead off on that one. Yeah, we've been seeing a lot of growth in alternatives over the last couple of years. I think a number of people have seen that some of the traditional ways of investing, the traditional 60-40 portfolio, just hasn't performed the way it should, or at least was marketed to perform over the last couple of years. And so with an increasing awareness of the benefits of alternatives to your portfolio, and importantly, as Mario and Ezra will also be able to attest to, it's the democratization of the space and making it more accessible for people to invest in, kind of learning from what the pensions have done over the years with more than 50% of their portfolios in alts. It's great to see it become more accessible.
Yeah, I think that's a great point. The alternative asset space has been one that ultra high net worth investors have been doing for a long time. By some studies, it's just, for instance, in collectibles, in which we deal with, that a very large majority of ultra high net worth investors at some major institutions have already been allocating to the alternative asset space. I think what's driving it is, access, transparency, and technology, and advancements in regulation. Collectible is a fractional ownership company, which allows investors over the age of 18, whether you have $10 to your name or $100 million to your name, to get the same type of exposure to these alternative assets, in particular collectibles, that the ultra high net worth has enjoyed for a long time. So yeah, I think it's increasing awareness, but I think awareness is often driven by the ability for access and for the ability for other people to participate. That really widens the playing pool for people of all income brackets.
Mario, would you like to add something?
Yeah, I think another point to mention is as well that retail investors are more and more aware of the fact that the ultra high net worth individuals are investing in alternative assets quite significantly. And so they learned as well about the price inelastic demand, which you see in alternative assets, so especially in luxury goods. And with that, I mean that there is quite a low supply usually and a very high demand for particular products. So you see that, for example, when you look at, so if you want to go to a store and purchase a Rolex watch or as well a Bergen handbag, so you will end up on a quite a long waiting list to get this asset. And this is as well kind of basically this inelastic price demand, which retail investors are aware about, and this kind of a reason as well for them to invest into alternative assets.
So essentially, it is a combination of having underwhelming performance in a more traditional types of assets, as well as mainly the actual awareness of the possibility of investing in alternative investments that has been driving this demand, correct?
Yeah, that's correct.
Okay. And how alternative investments have been performing at the moment versus the general market, you would say, if we had to compare?
Within our world, right? So we deal in iconic investment grade collectibles. We've really focused specifically on sports collectibles, although we are expanding into other categories. Within sports collectibles, it's really been a tale of two tapes, if you will. The really blue chip stuff, right? The things that are irreplaceable, that don't come up at auction, often, that are iconic, culturally and historically relevant, and top condition. Those things have been doing, unbelievably well. For instance, in Q3 of 2022, within the sports collectibles universe, you had not one, not two, but three record prices set in arguably one of the more difficult macroeconomic backdrops you'll ever see. A Mickey Mantle card sold for $12.6 million. Barron's featured this card on the cover of a Barron's edition, saying the best investment you could make is in a Mickey Mantle baseball card. We saw a Michael Jordan jersey sell for over $10 million. We saw a Maradona jersey sell for over $9 million. We saw a Muhammad Ali title belt set, a boxing memorabilia record over $6 million. So I think what you're seeing is things that are irreplaceable, things that are in top condition, that really appeal to people of all income brackets, that are, as we like to call them, beachfront properties. Those things, the demand for it vastly exceeds supply. Everything else that is replaceable, that comes up often, that people can take a little bit more of a wait and see approach, particularly if they're feeling tighter purse strings, that has tended to drift down along with the other asset classes.
Atul, Mario, would you have something to add?
Yeah, so basically the same is on our platform. When we look at the returns which we generate on our platform throughout the different categories like wine, watches, classic cars, art, and so on. So really do see stable returns over the last year as well. And this not in very easy market conditions. And behind that is definitely as well to mention that there is the real return in it. So it kind of covers as well the inflation, which is always what investors want to see. So they not only want to see a positive number, but this positive number needs as well kind of to cover the inflation rate. So
essentially what you're saying is that because we're invested in actual assets, they are inflation hedged.
Exactly, yeah. So that's on top. So they usually kind of, that's one of their characteristics, that they're kind of a very good inflation hedge, because the fundamental underlying value basically goes with the price increase on the general market. So if the wine at your discounter increases in price, then usually as well the fine wine increases in price.
Okay.
Right. Yeah, we're that's a nice tee up. Thank you, Mario. Yeah, we're as far as the fine wine space goes, it's basically performing as it should in these volatile market conditions. So some of the benefits of investing in fine wine are that there's a really low correlation to traditional equities and bonds, low volatility, and something we call low downside capture. That's an investment term for geeks, but basically what that means is when markets crash, fine wine won't crash as much, or as we're seeing this year, with the LiveX Fine Wine 1000 index is up 14% year to date. And when you compare that to the negative 14% on the S&P 500, the negative 28% on the NASDAQ, and even gold is down, I think, about 5% for the year. So fine wines performed quite well. And in addition to just the excellent returns that you can potentially have in fine wine, there's also the diversification benefits to your overall portfolio.
In fact, that's coming up to a question that I was going to ask, which is how much of your portfolio should alternatives make up for anyone?
Look, I think from our view, that's, it's a very individual question, right? I think a lot of it depends on one's risk tolerance, one's understanding, of the particular category. Oftentimes when you understand something better, you're more willing to allocate to it because you have more confidence in it. I think as a general rule of thumb, anywhere between 1% to 5% of your portfolio, I think that's a safe allocation again, but I do think it is very individual in terms of your risk tolerance.
Is there a cap?
There's definitely, as Ezra says, it comes down to your individual portfolio and your risk profile and all of those things, your overall portfolio. That said, I think that's right. Traditionally, people have kind of said 5% is a rule of thumb, but we're definitely seeing higher percentages in portfolios. And as you get to the more institutional level, sophisticated family offices, you can see 70%, 75% in alts. Definitely, when you look at the polls and questions of advisors, as to how many of them are looking to expand their use of alts, it's 60-70%. So that's all part of your first question, which is why is demand increasing? So I think we're going to see higher percentages of portfolios dedicated to alts. Will we get to a 50-30-20 instead of the 60-40? I'm not sure, but we'll definitely see the alt side increase.
Surely. I mean, if it's good enough for institutional investors, then it probably should be good enough for a retail investor as well. Now, which alternative assets have driven the performance over the last year? Which are set to be successful in the new economic environment, do you think?
Mickey Mantle cards, it sounds like.
If you ask Barron's, it's Mickey Mantle cards. Look, I can only speak to what I know. Obviously, it depends on how you define alternative assets. Obviously, that's a very broad swath. If you include real estate and venture and private equity. So I guess it really depends on sort of how you define alternative asset classes within the world of collectibles, right? I mean, I think certainly high-end vintage sports collectibles has proven to be a really resilient category. I mean, just look no further than what's already happened over the last couple of quarters. Babe Ruth, Mickey Mantle, Ty Cobb, right? It's these vintage iconic greats that appeal to really sophisticated high net worth clientele have performed unbelievably well. And then I would say that the same is probably true across other collectible categories, right? The stuff that is ultra high end, that is irreplaceable, that are quote unquote beachfront properties within their respective categories, where the demand for it always exceeds supply. And when they come up, because they never do come up, right? They're never available, but when they are available, there's lines and lines and lines of people who have an appetite for it, regardless of market sort of appetite, whether that's fully at auction, from one person or one entity, or fractional, which allows multiple hundreds, thousands of people to participate. The demand side of high-end collectibles always has, and I believe always will, exceed supply of availability.
So it's almost a matter of looking for the scarcity of anything, regardless of what it really is. So following that trend in order to determine whether it would be a good investment or not. In terms of
within collectibles, yeah, it's been a pretty simple formula, which seems to have stood the test of time. You need rarity and you need relevance, and I would throw a third one, and you need irreplaceability. So rarity, relevance, irreplaceability, those three things. If you have those three things, within a collectible investment, historically collectibles have done unbelievably well, regardless of sort of the market appetite at any particular time.
Atul, Mario,
Yeah.
would you like to add?
Yeah, again, as Ezra said, obviously there's a lot of categories of alts like private equity and private debt and infrastructure, real estate. Those are all things that I think, they may have their place in portfolios, but I don't have a crystal ball. I can't help prognosticate on those. I can speak to wine, much like what Ezra said with collectibles. Wine, there's only a finite amount of investment grade wine produced around the world every year, and the demand for that wine increases pretty much every year based on countries that traditionally didn't have wine drinking cultures becoming more of a wine drinking culture, or that with the creation of wealth around the world, people tend to like to enjoy fine wine, champagne, Burgundy, you name it. And then again, it's more people around the world chasing that finite amount of fine wine. So it's a very simple dynamic between supply and demand. And yes, people often ask us, what makes a wine an investment grade wine? Well, scarcity is one of the big factors where, again, if there's only a small amount of a particular wine that has a great brand, has a really good price history, gets great critic reviews, well, chances are that's a wine that's going to do well for you going forward.
Yes, and in terms of wine, it's even more exacerbated because once consumed, you can never replace it. At least with collectibles, you pass it, you resell it to another collector. But with wine, it's once it's gone, it's gone.
That's right. Absolutely. Yeah, and so, sorry, I was going to say ageability obviously is important as well, because you know, a lot of these iconic wines, they can age for 20 to 30 years, which gives the particular vintage a chance to appreciate it, as you point out, Dana, with consumption of the rest of what's out there.
Mario, did you want to add something?
Yeah, on top of that, what you see as well, kind of with the vines, the whole production usually is as well regulated. So it's not like an excessive increase in oversupply. And at the same time, you have like the changing climatic conditions, which kind of are very much unfortunate as well for the production. So it kind of curbs down the volumes as well significantly, or at least over the last couple of years, it was like that. So low production, you see it in prices of champagne wine, but as well Burgundy wine. So they had like quite a lot of price increases because of the limited supply, and the demand is growing, as Atul was saying. So global demand for fine wine is increasing, and similar trends we can as well observe in whiskey, in the whiskey market. So especially in India, there's a discussion about kind of getting rid of the tariffs, the import tariffs of Scotch whiskey. If that comes through, then there will as well be kind of a next price increase on the product.
Because of a new market.
Exactly, yeah. So a new market would open up, and yeah, so tariffs play as well an important role there.
I see. Thank you for that. Now, how do you expect alternative investments to fare if inflation and interest rates remain high or go any higher?
So I think we've covered that a little bit. Again, beyond returns, I think the important things to look at when you're looking at alternatives is just, you know, how are they going to diversify your portfolio, and how will they help insulate your portfolio from different market cycles and conditions. And then speaking to fine wine, like other physical commodities, it is a store of value. And so, you know, as I've mentioned, year to date, 14% up on the LiveX 1000 index, which is outpacing inflation. So when you look historically at different time periods, wine has been able to essentially disassociate itself from what the rise in inflation is doing, and you'll tend to see good returns still. Same with the interest rate issue, in that it really reacts to different macroeconomic type factors, and as we've said, probably the biggest driver of price appreciation would still be supply and demand.
Okay.
Yeah, fully with Atul on that. So especially when you look at alternative assets, and what they mainly bring is kind of a low correlation to traditional investment products, and that's what you as an investor need in order to reduce your overall portfolio risk. And basically what Atul was describing for the wine market, when you look as well at whiskey, like for example, the whiskey Apex 1000 index, which combines 1000 very much collectible whiskey bottles, you see that during kind of when the pandemic hit the markets in 2020 and the S&P lost like 30% of the value, like the whiskey index continued to increase. So it didn't like go into the same direction as the stock market. And this is kind of what you try to achieve when you invest in alternative assets.
Yes, exactly. So that's the whole reason why you even invest in alternative assets. Yes. You've touched upon something that I'd like to address, which is risk. So what are the hidden risks with alternative investments, or are there any?
Yeah, I'll take that. I mean, look, I think one of the biggest risks with it is liquidity, right? I think that's one of the biggest risks I see. You know, you could also flip that and say, well, sometimes times like this, you don't really want it to be so liquid, because when you make something so liquid, it really exacerbates behavior that a lot of times gets investors in trouble, right? When you have an online stock brokerage account, if you get scared, it's very easy to hit the sell button and kind of sell down positions, likely at very inopportune times historically. So sometimes liquidity can work in your favor, but I also do want to point out, yes, this is not as liquid as more traditional investments, right? We typically steer clients to think of these as with a multi-year time horizon, especially with high-end collectibles, allowing for a little bit of maturation of collectible investments tends to do quite nicely. So, if I had to call out one risk factor, these are not as liquid as traditional investments, but I would also say at times like this, when there does seem to be a lot of fear within the macro environment, sometimes the fact that these are not as liquid actually historically has worked to your benefit.
Wonderful. I also was going to ask specifically about the liquidity aspect of alternative investments. So thank you for touching upon that, Ezra. Atul, would you like to add anything on one of these two topics as well?
Sure. Yeah. Yeah. I know it's always a pun that people like is when we say wine is indeed liquid, and it is in a couple of ways. But yeah, I agree with Ezra. The other things that you should consider when you're looking at alts is pricing. Obviously, sometimes it's hard depending on the asset class to really get an independent price. So you may not exactly know mark to market where you're sitting day by day. So I think pricing, obviously the experience and track record of the provider of the investment itself, and then I would just kind of also within the actual asset class, just like in anything else, you don't want to make a concentrated bet. And so for us at Cult Wines, currently our investment minimum for our investment portfolios is $10,000. We think that gives a client a good diversification across different regions because you don't want to put all of your bet into one region. And we're working currently with a US platform to see whether we might be able to do a retail offering in Q1 or Q2 of next year, which would further provide accessibility. And I know we do some work with Mario and his team on fractionals, which increases the access again. And that's also what Ezra's platform does. So, back to that very first question, there is access to these investments that previously only ultra high net worths could get, whether it's directly or whether it's fractional. But each one of these developments is helping to drive the alts market, and I think doing some really great things for both retail and high net worth portfolios.
Thank you. So to recap about the risks, because that's something that everyone always cares about. So it is liquidity, it is the experience of the provider that you're using, it is actually knowing the price point that you're buying it in as well. So all of these. Mario, did you have anything to add on this or the liquidity aspect?
So I'm fully on the same page as my colleagues here, and maybe to add one other aspect to it, it probably goes as well a bit into the due diligence of the provider you're using. So kind of really looking at the provider you're collaborating with, because there's the market is growing so significantly, and they're if the market is growing, then this as well creates opportunities for people with the wrong intention. So I'm talking here specifically about counterfeits. When you purchase a particular luxury good item or as well a collectible, you need to make sure that you're really kind of buying something which is not a counterfeit. And I still remember when I entered the first time into a bonded warehouse, how they really do kind of check wine bottles that they're not counterfeits. And they explained me that a wine bottle actually is more kind of security specifics than a bank slip. And that was kind of unbelievable to me at the very first time when I heard about that. So that's definitely another aspect or hidden risk maybe to mention.
Yes. So monitoring also the factor of so many things being counterfeit potentially. Yeah. Thank you.
We have a very rigorous buying program in terms of making sure that what we're putting in client accounts are authenticated and the actual goods that the actual wines that they're represented as. And so we're not out there buying, old 1947 Cheval Blanc or anything. Most of our in US dollars, we have about 330 million in assets. Most of the wine is in kind of the last 10 to 15 vintage years, just because again, the closer we can get to the producer in our buying, the more you're going to be able to authenticate it. And knock on wood, we've never experienced a fraudulent bottle. And I agree with Mario in that providers really need to be on that issue for sure.
So it's your duty as the investor to do your due diligence on who you work with, so that then, of course, a part of their business model should be having anti-counterfeit, anti-fraudulent object checks, essentially.
Yeah.
Sorry about that. I was just gonna throw in, and I totally agree with all of these points. And at Collectible, we're an SEC regulated entity, so everything that we do has to go through numerous checks and balances prior to be listing on the platform. In addition, we have a very stringent authentication and grading policy. There are about 3 or 4 really reputable third-party, sort of authenticators within each category of collectible that we exclusively use. Everything has to be graded or authenticated and seen and checked by these reputable graders and authenticators. So yeah, I think all these points are spot on, and that is a material risk as the alternative assets industry becomes a lot more prolific and becomes a lot more mainstream. The provider and the trust of the provider really become pretty paramount to the success of one's investment.
Thank you for that. I would like to ask you, one of the questions are alternative investments actually for everyone? So who is the ideal customer for these types of assets? Is it for everyone?
I would say yes. If you have an investment portfolio, then alternatives have a place in your portfolio. The question that you asked earlier, Dana, is how much, right? It's what portion of your portfolio should be dedicated to alternative investments. And again, that's a very case by case, individual by individual type of decision. But that said, I think there are a number of investors with portfolios with potentially zero alternatives in them, and that there is a place for alts there.
I suppose it depends on also what type of alternatives and how do you mix and match those. There are several types of asset classes within that. Ezra, Mario, would you like to add something?
I would say what you need to bring to the table is a bit the longer investment horizon. So because of the illiquidity as well, what we discussed for, if you invest today money and you need it probably within the next 1 or 2 years, then you probably shouldn't really go for alts because of the illiquidity in the market, because you might need them to sell at a very bad price for you, not at the optimal price. And so I think that's one of the reasons which investors should keep in mind before they start investing into alternatives.
So what's the time frame that one should think about when they think about alternatives?
I would say at least 2 years.
Okay.
Yeah, we the advice we give our prospects and clients is think of it as a 3 to 5 year minimum investment. Because you want to give, not just from the liquidity aspect of it, but you also want to give the asset a chance to appreciate, because that's partly why you're investing. And as you said, Donna, I mean, consumption happens quite a bit over those years, and that's going to drive some of the price appreciation.
Thank you. I would like to ask you one last question before we go to the audience questions. There's quite a few of them. So can you talk to me about the upside and downside of fractional investing? I know, Ezra and Mario, you have that on your platform, so maybe you can expand on that, please.
Sure, yeah, I'll start. I apologize. There's a little bit of banging in my office, so I've been muting myself just to try to spare all of you guys from that. So I'll try to talk through all the banging. But yeah, I think fractional investing is one of the biggest, if not the biggest, trends that I believe will take shape within the collectibles industry for the next 10 years. What it does is it really broadens the liquidity of the collectibles market and gives both sellers and buyers optionality and flexibility that had never existed before. So I think fractional, to steal a line from a friend of mine who works at an auction house, fractional is imperative to the success of collectibles market. So you will not speak to anyone who's probably more excited about what the future of fractional has entailed than us. Look, but I think there are early pain points of it, and I think the biggest one is just making sure that there's mass adoption of fractional, right? So when we think about some of the things we can do, the power of fractional of kind of pooling resources together to kind of take down unbelievable assets, or to offset some of the risk, or to sell partial positions, to have a liquid, vibrant secondary market, to have regulations, to have transparency. There's so much that fractional investing can and will do within collectibles. The biggest challenge early on is liquidity, right? And so we talk about liquidity overall in the category that it's challenged. I still think, within fractional, it's challenged as well. So, I think it's one of those things where, as the fractionalization of alts and in particular collectibles continues to gain mainstream prominence and awareness and real distribution, I think fractional ownership has the potential to be arguably the most transcendent trend within collectibles, perhaps since the advent of more standardized grading and authentication. I think that has been, really one thing that has really made collectibles really transactable at, a real mainstream level. And I think fractionalization with its infrastructure has the ability to be that next great thing that really takes it to heights I don't think traditional collectors think are possible.
Mario, did you have something to add?
Yeah, so fully with Ezra on that. So it's a very great tool. So I really think technology leads us to a way which helps us to democratize as well the whole world of alternative assets. So we really are able by now to offer retail investors the opportunity to invest exactly in the same asset as usually ultra high net worth individuals do. I think that's the great power around that.
Thank you. Thank you very much. Thank you so much for your valuable insights. And I would like to answer some of our audience questions now. So I will start with the ones that have most upvotes. So compared to conventional investments, how do you determine the value of a specific investment given the limited information available? So that's something that you guys already touched upon. How do you assess private equities and put a value on arts?
I am not an expert on that one, but I mean, again, I think as an investor, when you're looking at an investment, you should determine how the provider is pricing the investment in your portfolio. And so for us, for fine wine, we use a feed from an independent third party called LiveX in London. And so as an investor, you get on your portal every day and you get an updated price that's an independent one made by a market that has about 550 professional investors around the world trading that wine every day. So that's how you take your comfort on pricing from us.
Mm-hmm.
Yeah, and within our world, certain collectibles are actually fairly easy to price, and certain ones are very difficult to price. Right, the things that have multiple of something. For instance, I'll use an example from the sports card world. Right, Michael Jordan's most iconic trading card, for instance. There's over 200 of them available, right? And these tend to come up fairly often, not every day, but these tend to come up, probably 15, 20 times a year. They'll sell on eBay, they'll sell at an auction house, and there's all these pricing aggregators who actually kind of consolidate this information in one place. So a lot of these things are, again, if they're fairly liquid within the world of collectibles, the pricing exercise becomes fairly easy. And then of course it's relationships, understanding where the private markets are, in addition to the public auctions. And then you have things that are quite difficult to price candidly, right? You have things that haven't traded in decades, right? And things that people haven't seen in a while, and how much the collectibles market has changed since the last sale. Collectible is actually working on a tool which we're really excited to release. I won't give any teasers right now, but Collectible is actually working on a tool that we're going to release next month in January 2023 that I think will be the perfect solution to really discovering what the price of previously illiquid assets are in a way that the sellers get price protection, but the market also gets an idea in terms of what they're worth. So excited to kind of roll that out. I wish we had announced this next week, but so yeah, I think that the pricing exercise and some things are quite easy. Aside from that, it's really just looking at it in the same way how real estate is priced with comparable sales, right? If one house in one neighborhood is worth this, then you use similar tools to price something else. A lot of that applies within collectibles. If this jersey or this comic is worth that, then a comparable comic is worth something within the ballpark, and then you kind of figure out what makes each asset unique, which makes one better than the other. So that's typically how it's done within collectibles.
Thank you, Ezra. So the next question is from Omar. In your experience, what are the best platforms to gain exposure to alternative investments, and what alternative investments do you find currently in this economic space? We'll just do a couple of quick ones. So if If anyone would like to.
Within collectibles, there's an amazing platform called Collectible. You should definitely check it out. I'm not biased.
I was just waiting.
Check out all of the speakers' companies, please. But aside that, does anyone want to add on a platform where you can find a myriad of different alternative assets?
I think there are quite a number of platforms out there. So we do have, like, next to ours as well, Finexity in Germany, you have Convi, but you have as well Rally Roads in the USA. So you have, like, by now many platforms out. This is well great. So the whole competition helps as well to develop, as well to curb on the regulation topics around that. I think it's always important for the investor to make themselves familiar with the different platforms and to evaluate which model suits them best.
So there's plenty of fish in the sea of alternative investments. Just do a bit of due diligence, in essence.
Exactly.
Now, the next question is from Ryan. That's going to be for you, Atul. What impact will climate change have on Cult Wines America?
Yeah, good question. Speaking just as a company, we're carbon neutral plus, so we're very we're very keen on all of the issues around sustainability and ESG. Within the wine world, climate change is a major issue. As Mario mentioned, you know, in the last few vintages, we've seen frosts early in France that would kill 50 to 60% of the buds, and therefore those buds never produce grapes. And so we've seen floods in Germany, we've seen wildfires and droughts in California. So, you know, climate change is a real thing. It's impacting the wine world as much as it is any other part of humanity. And so for the most part, for us, it's a matter of keeping an eye on these issues, what it's doing to production, and therefore, in most cases, increasing scarcity, which is good for investments, not good for the planet. But you know, some of the other ways that it's changing, there are some positives, which if you're looking for silver lining, certain regions that didn't produce wines that were traded around the world now are. So the south of England has seen an uptick in trading on the sparkling wine that's being produced there. And there are other changes. Some of the old laws in France that governed what types of grapes could be planted in a certain region are being changed to recognize climate change. And so 2 years ago, we saw for forever, Bordeaux only allowed 5 types of grapes to go into Bordeaux wine, but that was expanded, I think, by another 5 or 6 to recognize that for the future, Bordeaux needed to start planting vines with grapes that could deal with droughts or humidity or whatever other kind of conditions, you know, we may see in the future due to climate change. So a bit of a long answer, but at the end of the day, as asset managers in fine wine, it's one of the many factors that we take into take into account when we make investment decisions.
Thank you, Atul. So next question is from Daban D. What role does NFT play in an alternative focused portfolio, if any? Would like to take this?
It's a very good question. I'm happy to take that one. So as well, kind of thought about hard on onboarding NFTs. We basically call them digital rights. So what we are looking for in NFT is basically an underlying right which has value, so substance. So not really within the digital art space, but rather really kind of in an NFT which gives you access to something very specific. So it can be access to a convention, it can be access to music, it can be access actually to wine bottles. So I think we will see more and more NFTs when it comes to alternative assets as well, for retail investors will start to invest in because of the underlying right, which is there and has substantial value. But probably rather than in a way which is not directly correlated to a cryptocurrency like Ethereum, so rather kind of in a stable coin environment where you as well do not have the fluctuations of a cryptocurrency in it. So I think that we will see way more in the future.
Thank you, Mario. The next question is from Victoria. What is the ideal alternatives portfolio composition and best platforms you have seen also offering the educational content as well? Would like to take this?
Yeah, I mean, for Collectible, we've really leaned aggressively into content and education. I think that's one thing that not only conveys a lot of trust, but also does a lot to inspire confidence in investors and collectors. I think, again, I think there's a correlation between confidence and, your willingness and ability to, kind of invest more, but also to sit with the investment for a long enough time for it to really appreciate for you. So Collectible's really done a lot in the content space. We actually have daily podcast. We have a weekly show. We do a lot of content. We actually founded 2 live events. So we have a partnership, excuse me, with IMG and Endeavor. We actually started a whole conference on investing in sports collectibles. So we're firm believers in the value of content to convey trust and also to inspire a new generation of investors in collectibles.
That's great. Yeah, we also, if you look on our website, we also dedicate quite a bit of space to education, and we really believe that historically the area of fine wine has been, a bit archaic, very intimidating. And for sometimes it's on purpose, and we want to make it less intimidating. We believe that more people who kind of learn about and enjoy fine wine become more educated consumers and investors, of course. And part of what we try to do as well is also try to include or increase the inclusion aspect and diversity in that we do hold events. We have events with women in wine, BIPOC communities, and it'd be just to as a way of diversifying out the number and diversity of people who can appreciate and enjoy fine wine.
Okay, thank you both. Next question is from Alessandro. Do you think that asset tokenization can bring additional revenues to your businesses? Are you considering to invest in Web3?
I'm just going to quickly talk about that one. So we have put our entire inventory on the blockchain. And it was an exercise that we did really more from the perspective of inventory management as opposed to any other driving force. But it is something that we think is going to be helpful to us and maybe down the road the industry as well, because when you trade fine wine, it's a pretty labor intensive thing since it's a physical commodity. And so if it changes hands, you have to transport the wine in a lot of times. By digitizing the asset, we're hoping that down the road, we won't have to actually transport the goods, but rather they'll stay in the bonded warehouse, for example, and we just ledger over the ownership. So it'll save time, it'll save costs, it'll be good for the environment because obviously you're not shipping things around the world. And so hopefully more to come on that front, but there's definitely, as technologies like the blockchain continue to grow, these types of use cases, I think are good ones because they're tangible and they're real. So, maybe
thank you.
Keep watching the space over here.
Thank you, Atul. And with this wonderful last question, we will have to wrap up. But I must say that there's many, many more questions that people have asked, and I'm sorry not to be able to take them all. To all our dear listeners, you can find Ezra, Mario, and Atul on LinkedIn, and certainly reach out with the questions that didn't get answered. And with that, I would like to wrap up. And thank you once more, Mario, Ezra, and Atul. You have just learned about rise of alternative investments, and I'm your host, Donna Grinberga. Stay tuned for the next session starting at 7 p.m. Who Wins with Crypto Regulation, featuring Kristen Smith, Executive Director at Blockchain Association, and Susan Friedman, Head of Public Policy at Ripple. We've still got merch and Finimize subscriptions to give away today, so make sure you are attending every session to win something throughout the day. The next session will start in 15 minutes, so don't forget to tune in. Thank you, everyone, and goodbye.